What's up everybody? Welcome to the Stocks channel. My name is Corey and today we saw a very strong bounce across the board in the indices, but we still are in strong confirmed downtrends. Is this giving us any hints about what's to come? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were up a whopping 2.68%. However, we did get rejected exactly where you would expect at the very strong resistance level at 428. Now that's not too surprising after such a strong push. The bears are going to show up at strong resistance, and that's exactly what we saw. So closing below resistance did leave us guessing on where we're going from here, and you still can't forget that we are in a strong downtrend. So until we get the bullish breakout on SPY above 444 at this point, I would still be looking for opportunities for the stock market to get rejected at resistance and continue lower. Now there is one caveat to that, is that we still do have a gap to fill on SPY at 433.8, and it does look like we could go up there to fill that gap, find resistance at our 20 simple moving average, which will also be right there in that range, and then possibly see more selling to possibly go for another leg lower. Now in this market, there's two things that are facts, and it's very volatile and it's in a strong downtrend. So when you get a very volatile market in a strong downtrend, you need to be very cautious of getting overly bearish at strong support levels, because as you saw today, strong bounces are very possible even in strong downtrends. So you need to stay very objective about your positions, because you could really be making money trading in either direction in a volatile market. If you want to short the market, wait until we get to strong resistance, and if you want to go long on the market, wait until we near strong support, and then just set your risk accordingly, know your take profit and know your exit strategy, and trade the market accordingly. So at this point in the near term, I do think it's possible SPY is going to continue to trend higher, and I do have a target on that of right around 434. In the event we break and close above that level, you're still going to have strong resistance at 439 and 444, so those are going to be your critical resistance levels. If we start getting daily closes back above 444, we're going to be looking a lot more bullish and will more than likely finally lose this bear trend. Now in the event we get rejected at that price target or get rejected at 428, you're looking for a continuation of the downside, because we are in still such a strong downtrend. There's no reason to not expect more downside when you're in such a strong downtrend. So if the bulls start out and they're breaking right through 428, look for that strong resistance around 434. Otherwise, look for continuation to the downside with critical support levels at 420, 416, 411, and below 411, you're looking for the full gap close of support and our price target at 400. Remember, as long as we have the strong downtrend, our price target on SPY is 400. So over time, we're still expecting to see SPY trending lower during the month of March until we get confirmation of a bullish breakout. The bullish breakout is the only thing that's going to change the price target to a higher price target, because for the time being, we're in a downtrend, so the price targets are much lower. So continue to point your eyes lower until you see confirmation of a bullish breakout. Now, one final thing to note is the last time we saw a very high volume buying day was back here on February 24th. And so far, we have not taken out that low at 411. So it's very hard to call a bottom, especially in a very volatile and strong downtrend. But there's still the possibility that we did see the bottom, because we now have a higher low and we're starting to see a pivot. And if we do start getting the bullish breakout and we start closing at new daily highs, it's going to look significantly more likely that we saw the bottom and we're due for a very strong counter trend relief rally. We won't know until we start getting bullish confirmation of the breakout, but right now you can very clearly see we're at a higher low, even though on closing prices that was a lower low. So if you're following intraday price swings, you really want to set your risk at 411. But right now, the bulls are in control until the bears show up at one of these strong resistance levels and start to drive the price lower. As long as the bears don't lose the downtrend, the bears are still going to be in full control of this market. On the NASDAQ 100, we had a very strong bounce today, going up 3.6% and closing back above the 5 EMA. And our bullish breakout on the triple Qs is only just above 341. Our 20 simple moving average is right around 343, so watch that level as well. And our 50 EMA is currently sitting at 356. We'll also have a resistance level right around 352 to 353. So all of those are going to be your critical resistance. Just like on SPY, we had the high volume buying day on February 24th. And so far, we have not taken out that low at 318. And we're starting to see a strong bounce from here. So if we don't take out that low at 318, it's going to invalidate the price target at 315 if we start getting the bullish breakout and lose the bear trend. But as long as we have the bear trend, the price target on the triple Qs is still the gap close at 315. So watch that as the price target as long as we're trading below the negatively sloping 20 simple moving average. If we start to get a bullish breakout and we're getting above our resistance trend line, then you want to start considering the fact that we might have seen the bottom and we're due for that strong rally to the upside. Even though in the bigger picture that could still mean more downside is coming, but in the short term there's still a possibility if we do get that breakout that we have more upside before we continue any lower. So to the downside, look for strong support levels at 329, 323, 318, and then the price target is the gap close at 315. Respect the strong downtrend and respect the fact that this is a very volatile market, so there's still going to be plenty of traps and plenty of whipsaws. And the Dow Jones did close back above resistance at 333, and we did close back above the 5 EMA. This is the exact same story as SPY in the triple Qs with the higher volume day, and so far we do have the higher low. So if you start to get the bullish breakout back above 340, you want to get a lot less bearish, and then the next bullish breakout will be back above 347. We'll also have strong resistance at our 50 EMA, which is going to be right around 345. And in the event we do get the bullish breakout, you're going to want to start looking for that gap close up there at 360. So don't forget about that gap if we do start to get a bullish breakout. To the downside, you have support at 333, 328, 325, and 322.6. And the confirmed double top price target, as long as we're in the bear trend, is down here at 315. In the Russell 2000, we were up 2.82% today, and we closed right at that resistance level, which is right around $200.50. You can see that's right where the 20 simple moving average is, so if we start to break above that level, that will be bullish, but we really can't be getting bullish until we at least see a close back above 207, and you can really start getting bullish if we get a close back above 212. So those are your very critical resistance levels to pay attention to. Otherwise, respect the downtrend, and we now have critical support at 197 and 191. And if we break below 191, we're very likely going down for a very significant leg lower all the way down to 170. On Arkk, we were up 5.27% today, and we closed just above that level at $60, back above the 5 EMA. But we don't have a bullish breakout until we get back above 67 and get a new daily high back above 71. Our 50 EMA is now at 75, so don't be getting bullish until we can at least close back above 71. But more than likely, you're much better off if you just wait for a close above the 50 moving average. To the downside, look for support at $60 in the previous daily low at 57.5. And if we break below that, you're looking for the next leg lower all the way down there at $50. On the VIX, we were down 7.63% today, and we are starting to see the VIX getting crushed a little bit ever since we hit that high just above 36. However, we are still above the support trend line. If the VIX starts getting crushed back down below 30, you'll want to be taking note of a potential bullish rally, even if it's short-lived. And next time the VIX closes below 24, we'll be looking a lot more bullish. With full confirmation, we're going back into a bull market, likely when the VIX closes below 20. So the VIX is still very elevated, and if we start to bounce off this support trend line and rocket back into the high 30s, it's a very real possibility we're going down for that next leg lower, which does mean we could be entering a bear market. So respect the VIX at these levels and continue to expect a very volatile and whipsawing market. And please remember that volatility does work in both directions. So just because we have a high VIX doesn't guarantee that we have to continue to go lower. On Bitcoin, we're currently up just over 8.5%. Bitcoin is trading back above the 50 EMA. And remember, we were about to have a confirmed double topping pattern if we got a daily close below 37,000. So the Bitcoin bulls wanted nothing to do with that noise, so they're getting the strong bounce off of this level. And now we're starting to get a bullish breakout. However, you really shouldn't be getting bullish until we can at least close back above 45,000. And if we can get back above 45,000, you're looking for critical resistance right around 51,000 and 53,000. So there will be a nice little bullish run above 45,000. So if you want to play that breakout, watch for those next critical resistance levels above. To the downside, you're still looking for support right around 41,000. And the most critical level of all is still going to be 37,000, which is the double top neckline if we do break below it, which means Bitcoin could be coming all the way back down to $30,000. So watch that critical breakout above 45,000 or the critical breakdown below 37,000 and then trade accordingly. On NVDA stock, we were up nearly 7% today, and we see NVIDIA did break back above that level at 223, but we are still in a confirmed downtrend. We got a strong bounce off of 209, so if we do get a bullish breakout, it's going to be on a close back above 244, which is going to make this look like a double bottom. Above that, your critical breakout will be back above 249 and then 253, and we'll be looking very bullish above the 250s, which means we could see NVIDIA attempt to break out above 270 and start to run into the low 300s. However, all of that is just a dream as long as we're in a downtrend trading below resistance, so don't get bullish until we get confirmation of the bullish breakout. So above 244, you're looking a lot more bullish, but you'll still have to fight with that 50 EMA and close above that level. To the downside, you still have support at 223, 209, 197, and 192. On Tesla stock, we were up 4.19% today, and we did squeak out a close just above the 20 simple moving average, but we are still in the bear trend. Remember, Tesla has a confirmed double top look as long as we're trading below 900, which means as long as we have the bear trend, the price target remains 592. The Tesla bulls can say goodbye to that price target if they can start closing back above 900, and then the next bullish breakout above 900 will be a close back above 937. However, until the bulls can prove it and close above those levels, you want to continue to expect more downside with support on the way there at 827, 763, and 709. On Apple stock, we were up 3.5% today, and Apple did close back above that very critical level at 162, but the bullish breakout is going to require 2 closes back above 168. You can see that we are in the confirmed bear trend and we're still below our resistance trend line, so try not to get overly bullish when we're coming into very critical resistance. If Apple gets rejected at 164, you're looking for a breakdown of 162, a retest of 157, and then below 157, you're looking for 153 and then 147. So watch to the downside because we do have the bear trend. Otherwise, you're waiting for confirmation of the bullish breakout in the price action. On the financial sector, we were up 3.67% today, and we do have a very small gap to fill to the downside and a very large gap to fill to the upside. We're currently in a bear trend, but we do have gaps to fill, so there could be a little more upside left before we see continuation of the downside. The financial sector will be looking a lot more bullish if it can get back above the 50 EMA. The industrial sector was up 1.81% today, but we're still in the bear trend and we're still trading below our resistance trend line. We do have a gap to fill way up there at 106, but wait for a confirmation of a breakout back above the 50 EMA, which is trading right around $100. On the healthcare sector, we were up 1.89%, and the healthcare sector is starting to get another breakout back above 3 of our 4 moving averages. The next time we get a bullish breakout back above the 50 EMA, we could start to run in another bull cycle that could take us all the way back up to that gap fill at 141. If we continue to the downside and continue the bear trend, look for the gap fill below at 127. On the energy sector, we were down just over 3% today, and the energy sector did close right on top of the 5 EMA. And the energy sector is still in a very strong bull trend and still seeing very high volume. So at this point in the game, if you're looking to get short on the energy sector, I would really be patient and wait for a confirmation of a close below our support trend line. It's still possible we're trending up here towards 81, but things can change very quickly, so watch the price action closely. In the event we do start to break down and lose the bull trend, don't forget we do have 2 gaps to fill much lower. So jumping back over the S&P 500, even though we had a very strong bounce today, you can't forget that we're still in a very strong downtrend, and there's always the possibility you get a very strong counter trend relief rally in a very volatile market as you come into strong support. So try not to get overly bullish until we see bullish price action confirmation, because in a bear trend, price action is trending lower, and if you get too bullish too early, you could still be stuck holding the bag as we continue to trend down towards that price target at $400. So respect the downtrend and respect the volatility, and continue to watch these very critical levels and how the price action behaves at these levels. There's nothing that will give you instant feedback like following price action. Everything else is a lagging indicator, and by the time you see it shifting momentum, you'll likely already have missed the move. So follow the price action, because price action is king and price action cannot lie to you. You're looking for higher highs and higher lows to get confirmation of a breakout, and so far we still have lower highs and lower lows, so respect the fact that this is a strong downtrend. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. With all of this market volatility in a brand new trading year, I think now is the best time to be a bank member. You can find out all of the information about Bank Trade Alerts and learn how to subscribe by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. So if you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.